podcast where we put you on the map. This is Ron Costa broadcasting live from the Mappable USA studios in Las Vegas, Nevada. And folks, today, everybody wants to get money for their deal. These crowdfunding issuers, they want investors to invest, but there's a whole sequence. There's a lot of things that goes on in between. And today we're going to start to talk about that a little bit. So before we do that, let's introduce Vicky Hutchmala from the World Token Market. Vicky, how are you today?
I'm fabulous today, Ron, as I am every time we do a podcast, and I'm in fabulous Las Vegas, so, life is good. And we have an exciting guest. We're going to talk about exciting stuff. We're going to let our listeners know how they can help our listeners change the world, make it better and easier, and let's get started.
There's so much going on in crowdfunding behind the scenes, and today we're going to demystify that a little bit, I hope. So let's start off by introducing Kinsey Cronin. Kinsey is the Senior Vice President of Business Development over at Fund America. Kinsey, how are you today?
I'm doing great. Thanks for having me on, Ron and Vicki.
Absolutely. It's our pleasure. Yeah, it's our pleasure. And from what I understand, Kinsey, you're living in La La Land in Los Angeles where everybody wants to live. Isn't that right?
I guess so. I don't know if everybody wants to live here, but yeah, that's where I am right now.
People always say, well, the weather in Las Vegas, it's so hot. What do you do at that point? We're like, well, we go to California for July and August where you guys are because you have weather that's perfect all year round. So.
Yeah, we like to come out to Vegas in the winter, though. It gets a little chilly.
Exactly.
We all have our good points.
Yep. Mm-hmm. Yep. So before we get started here, Kinsey, why don't we talk about you a little bit? Why don't you give us a little bit of your background and, what you're doing and how you got to Fund America and what Fund America is all about?
Okay, cool. Yeah. So I spent the last 5 years working in maybe almost six now, working in the equity crowdfunding space. I worked at this travel startup years ago, and it was acquired, and basically an old boss who had founded that company and exited, he took me out for a drink one night and he said, look, I have an opportunity for you. If you take it, there are two things that might happen. One, you're going to hate me. You're going to hate that I sent you this way. Or two, it could actually change your life. It could be a whole new career for you. And so I said, okay, well, what is it? And he said, okay, it's equity crowdfunding. It's these companies, they're trying to raise money from investors on the internet, and it's allowed now because this is back 2015, 2016. And many of these investors, they will have never invested in anything before. And so I said, okay, I also have never invested in anything before. I don't know anything about investing. I don't know anything about finance. I don't even like math. And he said, yeah, that's actually what they want. They don't want anyone bringing any old ideas because this is a totally new way of doing it. So they don't want you to come in saying this is how to invest, this is how it should be done, because it was all so new. So I gave it a shot, and I loved it. So I ended up working at Start Engine, which is an equity crowdfunding platform, and I turned into a complete finance nerd. I ended up getting a Series 7, a couple other ones, a 63. Just totally started geeking out about getting capital formation. And then a couple years later, I had a great working relationship with the Start Engine escrow services and compliance provider, which is Fund America. And it's plugged in and kind of powers a lot of equity crowdfunding platforms. And we can talk about how, but I ended up switching over. And one of the reasons was that Fund America was starting to explore a lot more about crypto and was leaning into that, and I was really excited about that side of it. And I just wanted to be able to work with more. So at this point, I've worked with thousands of companies raising capital.
Yeah, you got to love a job where the job qualifications are to have no qualifications.
Exactly.
That's a scary but exciting thing.
That was pretty much it. It was have no qualifications, don't know anything, come into this without any old ideas about how things used to be done. So that's how I learned about this whole space. That's how I learned about investing and how I learned about raising capital. It all started for me with equity crowdfunding.
And what's interesting about that too is that when most people talk about crowdfunding, this is like years ago too, when this whole thing just started, many just thought it was just a Kickstarter type of thing where you invest your money, you get a T-shirt or you get something back. And now all of a sudden you have stock and you have ownership and that kind of stuff too. I mean, that must have blown people's minds. And I guess even in your case, when you're talking with people who never been investors before, they had this opportunity, and I guess there was a learning curve there for both you and the client.
Yeah, it was. You know, I remember just thinking, not totally grasping it at first, thinking about crowdfunding like a Kickstarter, and then realizing like, oh, this is like the stock market? Like all of these little companies that you could buy and sell and trade, and that is what's happening. You know, at first it wasn't. At first it was hard to find a secondary market, but now the secondary markets exist. So, you know, but you know so much more about these companies because it's the personalities come out so strongly, and you understand what they're trying to build and what they're doing.
Yeah, and there's a lot more ways to get your message out now too, with all the platforms and the video and the conferencing and this and that. And hopefully when we get trade shows back, we'll be doing that as well. But you know, your company, Fund America, is basically software based, right? Isn't that a software company?
Yeah. So it is a software company, but it's a financial services company. And Fund America is a Prime Trust brand, so we have kind of both sides of it. But basically, it's a trust company that provides financial services to fintech innovators. So that includes the blockchain space, and then in this space, it can be blockchain related or not. It started out totally unrelated to blockchain. But basically what we do is when a company comes to a platform, let's say it's a Republic or a Start Engine or an Issuance or something, they want to they say, okay, I like this idea, I like this guy, I see him on the video, or girl, the CEO is talking, and I'm excited to invest. Now I'm going to go ahead and put, let's say, $500 into this company. They have to go through a process from that point that's got to be smooth for them, right? They just want to put their information in and put their money in because they're just trying to make this easy. But on the back end, there's some key steps that have to happen. One of those is that you have to know exactly who that individual is that's investing. You can't just take money blindly from a stranger that you don't know anything about. So you have to do a know your customer review. So it's essentially a background check. And you have to do an anti-money laundering check on them as well. Make sure that they don't have any history or of criminal activity or of potential money laundering, and then that they're not just trying to use this investment opportunity for the wrong thing, which is, by the way, really rare, but it's still important to do. So what Prime Trust and Fund America does is we have an API, so that means it's a plugged-in software in the back end. So when they enter their information on the portal, let's say it's Republic portal, the information comes to us. We have a compliance team that does that review. And then when they send their money in, we receive the money at Prime Trust into an escrow account. So we have created an escrow account on behalf of the issuer, who is the company raising money. And all of those investor funds go into that escrow account. And at the time that the terms of the raise agreement are met, a lot of times there's a funding minimum, so they can't take any money unless they hit $50,000 or $1 million or whatever the number is. So once those numbers are met, and we know all of the individuals, we know who's investing, we've received their money, the checks have cleared, that's when the issuer actually gets to take the money out of the account and start spending it. So they can do that a bunch of times, so they don't have to just do it once at the end. But we're the back end that's facilitating that process. So the identification and verification of that investor, and then the movement of the funds from their bank account originally all the way to the issuer who's raising the money so that it can get used.
So you're just the go between the investor and the issuer, making sure that everything is copacetic for when the issuer finally gets the money to use.
Exactly.
Is that right?
And it's really important. Yeah, and it's really
absolutely
important.
That's prime.
Yeah. The issuers have to have somebody do that, right? You can't just say, "Well, write me a check personally," right? It's got to go through.
Right.
Through an
That's what I was going to say. Every issuer has to have this KYC AML functionality, whether they're doing a Reg A or whatever. And this all happens in the back end as far as the issuer is concerned. They don't really see anything that goes on as far as what you're you guys are doing, right? They just know at the very end that this investor is clear to invest. Is that right?
No, exactly. Usually the issuer will sign an agreement with us, but if they're using a crowdfunding platform, it's all happening in the back end. We do have a button, an Invest Now button that they can put on their website if they're doing a Regulation A+ raise, which means they maybe are not using a portal. If they're not using a portal and they just have their own website, they can use our button and, they just fill everything out, and then the same thing works. But most of the time we're working with portals, and it's really important because if you want to, let's say you want to create a crowdfunding platform, and for a niche, maybe it's a real estate crowdfunding platform, you want to help people flip houses or something. If you're not a broker dealer, if you don't have that license, you have to work with somebody like Prime Trust in order to be able to move the money through. So it's a pretty important piece, and it's just convenient that we do it smoothly and all the pieces you need are in one go.
Yeah, you said that you guys were getting into the cryptocurrency a lot. Is KYC more difficult for crypto, or is it just the same process?
It's the same process because when we are involved in crypto, we are still identifying the user, right? So we're opening an account for them to hold their crypto the same way we'd open an account for anybody to hold cash. So we're still identifying them, checking their ID, and validating their address, that kind of thing.
How much of your transactions go through a blockchain application?
Oh gosh, I don't know. So most of the crowdfunding ones are not quite yet doing anything blockchain related. I mean, in the crowdfunding space, it's what would be called a security token, right? So basically, it's the same security you're offering, the same share or stock or whatever that you're offering in a company, but instead of a share certificate or just a book entry log of the fact that this person now owns it, and Vicky now owns 10 shares, it's now going on a token. So Vicky owns 10 tokens, which represent the 10 shares. It's just a new type of certificate, right? So for us, when it comes to equity crowdfunding, we can work with any blockchain or any chain issuer because we're really just managing the onboarding and the ownership of the security. On the other side of our business, which is different from everything I've described, what we do on our Prime Trust business, we actually support, I think it's at this point, billions in transactions monthly for a number of cryptocurrency exchanges because we provide financial rails for those exchanges. And that's a bit different from what I've described with Fund America.
So you don't actually operate through a blockchain. You just facilitate the process of getting money from here to there and back again.
Exactly. That's exactly right. Yeah, we're not a decentralized application. We're very centralized, right? Because we're a regulated trust company. We're a financial institution, reporting to FINRA, and we are the fiat onboarding because we are also a tech company. So I guess that's it. We're like this stodgy old type of company, a trust company, but then
you're kind of a hybrid
technology. Yeah, exactly. So we can onboard the money and do that the way that is pretty traditional, frankly. But then we have these integrations that can connect to technology that can power and basically, get real U.S. dollar onto the blockchain, essentially, on and off. That's a key service that we offer.
And you open the door to a larger demographic of investors as well because of the way your platform operates. It's not, now a lot more people are getting into investing because they're understanding it, and the process is easier, even though all of the aspects that you are doing are complicated and time-consuming and involve a lot of steps. For the investor, it's pretty cut and dry and easy, and here's my money, here's my info, and this is who I want to invest in, and boom, there it is, and I don't have to worry about it.
Exactly. Yeah, you're exactly right. We can make it really easy, even though it's complicated and hard. We can make it really easy for that end user.
Yeah, because nobody even wants to know how you're doing it. They just want to know that you're doing it well, and there's no glitches.
Exactly. You're so right. Yeah. And you're right. One of the I think really interesting positives of the pandemic and everyone being stuck at home has been the amount of learning that people are doing about investing. And
absolutely,
I love that. It's so great seeing people start to understand, and just knowledge is power.
Well, exactly, and in terms of the blockchain and tokens and that, as well as Reg A and general investing, it forced people to look and see how the world works and see how the world is changing, and that more people and everybody can get involved in it, and it's no longer that old boys group, where the good old boys had the money and they ran the world and all of that. Everybody's involved in that. You're absolutely correct. The pandemic caused that to happen, and if there's any good thing about it, that's it.
Yeah, it's one of it's one of those things that happens when everybody's forced to change and adapt, But you're right. There was just this closed off sense of how who investing should be available to, and how people should be allowed to invest. And I think people are starting to understand what's going on behind closed doors a little bit more, and saying, well, wait a second, hey, that's one of the things that, like when it comes to IPOs, I was recently, as you guys know, I have a new podcast, and I was talking with some experts, and I found out that typically when there's an IPO, the average increase in value from the night of the IPO, when it's still closed doors and it's just the high profile, the exclusive high net worth investors, right, until the next day when it goes on the market, the average change is it goes up 18%. So the people who are showing up to invest in this IPO, like who are the suits that have access to a lot of money, they can basically flip it for 18%.
Exactly. And that's changed a lot and involved a lot more people, and that's why we have issues with the Robinhood and the GameStop and all of that, because it opened up the world to a whole new group of people who never would otherwise have even considered their ability to invest because they didn't understand it. And now they do, which is good for you.
Yeah, it's good. It's good for me. It's good for them too, though. It's good for everyone.
It is.
I mean, I love it.
It's good all around. But another thing about this KYC AML thing that I'm curious about is when someone creates that account, uploads their documents or whatever they have to do to get verified, how long does that process usually take for you guys? And does the investor get an indication that, yes, you've been verified for investment?
So typically it's going to take a couple days. Sometimes there can be an issue with like putting their birthday in wrong or something, might take a little longer. But yeah, I mean, for a U.S. investor, a lot of times it can happen almost, within the same day. And what we do is we usually allow them to send their money in right away. So it's still one step for them. So instead of getting a notification that, okay, now you can invest, they're actually just going to get a notification that they did invest. So they put their money in, and then they start going through the process. And if for some reason we can't verify them or something, we send the money back to them.
And you mentioned before you have the escrow services there that holds the money for each individual issuer. What about any kind of transfer agent services that you guys do? How do I get a statement of what I bought?
Yeah. So we aren't technically a transfer agent, but you get a statement of what you bought. A lot of times the portals will actually build that in, so you can see everything that you've purchased in the, if you're purchasing a bunch of different shares of different companies, you'll be able to get a statement regularly on however you're using the account. Now, what they can also do is if, let's say you invest in something that has dividends, our accounts can also hold any USD that's going to be coming back to you. So you could open an account and make some investments in something that offers dividends, and then those dividends can be collecting in that same account. So you can maybe go back in there a couple months later and have some funds to be able to transfer back out to your bank account.
Got it. Okay, and then another aspect of this, which I find really interesting, is you touched upon it before, is you can just place one of those buy now buttons on someone's website then, right? You can make this into kind of like a private label situation for issuers?
Yes, if they're doing a Reg D or Reg A plus raise, which means they don't have to go through a portal,
right.
Yes, it's the Invest Now button. It takes, a couple hours maybe to plug in all the details. Basically, you put in all the information about your offering. That's whether it's registered with the SEC or whatnot, who's working on it. You put that information in, and you basically get a link that you just embed into your website, and now you've got this thing that says Invest Now. Anybody who comes there can click it, and it takes them through the onboarding process for the investor. So name, address, ID, how to send your money, and that kind of thing.
Exactly, and you'd be amazed at how many people that I talk to that say things like, "Oh, I'll just do it myself," or "I'll put the button up myself," or "I don't need this AML stuff. I can do that myself." Like, really? Do you understand what's going on here?
Yeah, everybody can do anything until they find out that they don't know what they're doing.
That's where the Invest Now button is really perfect, though. It's for that person because it's really not very expensive, and it's easy, and it kind of is like doing it yourself. You're still directing people to your own site. You're going to have to set up an escrow account no matter what, right? So it's actually easier than trying to have this all go through somebody who's not linked up to the internet.
Got it. Yeah. Another big issue that you guys have to deal with, I'm sure, is compliance issues, like with broker dealers and basically with the SEC too. Is that how do you guys treat that?
Yeah, we work with a lot of broker dealers. We are, we're a compliance company, right? So we're always paying attention to the SEC. We've got tons of lawyers that we are in our ecosystem that either are our lawyers or our clients' lawyers. We're constantly looking at what the guidance is, evolving when necessary, paying attention, writing comments when new regulations are out. We do that. We say, we'd like you to think about it from this angle or that angle. So we're very much involved. This is a regulated space, and our interest is in keeping it regulated and helping those regulations work really well along with new technology.
Kinsey, have you found that in this new way of investing, are there certain industries or companies that use your services more than others, or is it just a general come one, come all kind of thing?
You mean like the ones that are raising money?
Yeah, the types of businesses or the types of industries that are using your platform, are they general or are they specific, or is there a certain company that it works better for, or is it just open to anybody? It's equally easy for everyone.
Well, it's equally easy for everyone. There are a couple of industries that are considered more high risk, just the general high risk industries that we need to take an extra look at. But those industries, you're all used to it, cannabis and whatnot. They're used to having an extra look at them. But where we serve is the ones we serve best are probably the ones that are looking to have lots of raises on a platform. So whether it's a niche portal, real estate does really well, so I could point to that as a direction that this is really popular with. When it comes to the more general public portals, consumer products are really good. Anything you can sell well on the internet, like through Facebook ads and stuff, gadgets and things, those have a tendency to do well with capital raises too, because it's the same thing that makes somebody click on it that wants to buy it, makes them interested in investing too. And then you've got a lot of niche platforms out there, people who recognize opportunities. Let's say you're in the medical space and you're seeing a lot of medical technologies developing, And the people who would be the best at recognizing those opportunities, let's say, are doctors, right? And I wouldn't recognize it because I'm not a doctor. So maybe you develop a portal that's specially designed for that community of investors to be able to take a look and see if, they want to be the ones investing rather than giving all that opportunity to the more exclusive groups, right? And then you also have the benefit of those niche communities then supporting the product or technology that's developed. So you basically have a built-in brand awareness, and built-in customer base potentially based on the fact that the people who are going to use the technology are the ones who are investing in it.
So it doesn't matter what state you're in or what type of industry, it's kind of generalized. What about if you go into specialized industries like cannabis or cannabis research? Is that create a problem for you and your platform or for the company to raise funds?
Not so. Like I said, cannabis is one that has a tendency to get a little bit tricky, no matter what they do. Right? Everything they do is a little bit harder. But no, I mean, as long as what they're doing is legal, as long as they're not crossing into the wrong states, that tends to be the issue. If what you're doing has special state rules or border crossing regulations, we are going to have to be really careful and make sure that the investment opportunities are not offered to the wrong people, right? And then it's the same. If you're doing a Reg D 506C raise, you can go on the internet, but you can only go to accredited investors. So you got to make sure you're not advertising to people who aren't eligible to invest because they're not wealthy enough, right? So there's always going to be those little contingencies, and we're going to take a look at them. But in general, I would say that anybody who's considering it, they're probably going to be able to do it. So it would take an in-depth conversation to probably figure out that they're definitely not going to be eligible unless they know that they're breaking the law, in which case we don't want them to call us. We don't want to talk to them.
Don't bother us. Thank you very much.
Yes, exactly.
I have a few extra questions before we close this thing out. Kinsey, in Reg A, there's this testing the waters capability where you can kind of feel it all out before you commit a lot of money to your campaign. Is a company that is doing testing the waters, are they too premature to work with you at Fund America, or do you do that kind of stuff as well?
They should definitely start working with us if they're doing a testing the waters, because obviously that's pretty far down the line. Our technology, you don't really need the same technology because all you need in that case is a counter, right? When you're doing testing the waters, you're just taking names, email addresses, contact info, and how much they're interested in investing. But if they're not going to actually invest, then you don't need an escrow services provider because it's just a pledge, right? But if somebody's doing that, they definitely want to have a plan for how they're going to go live because you don't want to lose any marketing momentum. If you've got a bunch of people interested, you don't want to wait too long before you actually go and take their money. And in that case, you're going to want to have everything set up well with us.
Right. Got it. And the last question I had was when somebody does a campaign and it's it goes through this whole thing with the escrow and you're ready to cut the check to the issuer, and let's say they raise, let's say $5 million, for example. What is your part in that after that check is cashed?
So once we've checked, a lot of times it can be closed out at that point. If somebody who's raising successfully may want to come back and do another raise. We have obviously some important customer data that we give them, investor data, who's on their cap table now. And sometimes there's some residual funds that maybe we're taking a little longer to clear or something. So sometimes there's usually a couple additional checks that will come based on however the pattern of their capital raise went. But no, after that we're pretty much done. Then you should talk to us on the prime trust side if you're in a finance business in the fintech world about working with us on that side. But if this is something like raising money for to build a 3-wheel car or something like that, at that point take that money and build the car.
Yeah, right. Exactly. Just keep in touch with your lawyers, right?
Right, of course.
Those lawyers
that's
are in everybody's pie.
that ties back into what you talked about at the beginning of the podcast, Kinsey. When I think lawyers should have on their answering machine, the first thing is, you're probably going to hate me, but that kind of thing.
Let me help you.
Yeah. Yeah.
So tell us about your.
Then you're going to be glad you hired me.
Tell us about your podcast a little bit. You mentioned that before. What's it called, and how can we find it?
Okay, it's called In Crowd. It is on most podcasting subscription apps, whatever app you get your podcast on. It's also at incrowd.fundamerica.com. incrowd.fundamerica.com. And basically what it is it's like a foundation for understanding this equity crowdfunding world. I don't know about you guys, but I found that no matter how much you know as an expert in a space, there's always stuff you don't know. I think that's true of pretty much everybody. And so what I found is that, we have little gaps in our knowledge, and In Crowd's goal is to draw a straight line. So if you listen to all the 6 episodes, you're going to have the full scope of what it means to raise money from the general public, or the full scope of what it means to invest in one of these companies and what they're doing. So the first episode is a little bit about the Jobs Act and kind of ties to the GameStop stuff that we've seen with GameStop, this whole idea of the retail investor, what that means, what the rules actually are, what you can actually do with them. We talked to a lawyer. We talked to a guy that raised over $70 million. We hear from somebody who wrote the Jobs Act, which allows it. And then the other episodes, they continue that path. So the second episode is about IPOs. What are they? I know you guys talked to Darren Marble about his series, Going Public.
Yes.
Where people can be able to watch and invest in companies. And so I talked to him, but then I said, well, I don't know if I know that much about the normal IPO process. So talked to a couple of people who, professors at Yale and Cornell, who explained, why do we even have public companies, the oldest ones in history, what it's like to bring an IPO or a company public now, and then how do you get to this point where what we're going to see in the future with Darren and his show Going Public. And then we have an episode on how to market, an episode on the money financials of doing something like this, what it means for a company, an episode about crypto, of course, tokenizing assets, and then another one about secondary markets and the investor perspective. So basically, as a set, we only have one episode out. The second one comes out this week. It's going to be released every 2 weeks. But as a set, it really explains for somebody from the beginning to the end about what this world is. So if you're looking to get into it, this is a guide.
I love it. Yeah, that's excellent.
That's great.
Yeah.
And that's what Ron and I like to do with our podcast is, like you said, no matter how much you know or think you know, there's always more to learn. And so we like our podcasts and our guests to be able to put forth more information so that you can enhance everybody's ability to just live better in the world and do more things because now you know a little more. So passing on the information is vital for our podcast, and it sounds like that's what you're trying to achieve with yours as well.
Yeah.
Exactly, yeah. And I'm a big fan of you guys, and what you do so well is get all the different perspectives and see what's coming next and what's happening now, which I love.
Yeah, Kinsey, I got to tell you something. With all the information that's out there via podcasts, the internet, shows, all this other stuff, crowdfunding sources, it's amazing what the internet is. Why would anyone go to business school? Why don't you just learn it on your own here from all these great sources and save yourself $240,000 and put yourself in debt?
There you go. I learn from the people who've been there.
I won't name any names, but I've spoken at a lot of business schools and found that in those classrooms, when it comes to this stuff, which is so new, they're not quite caught up yet. So I think you're actually better off listening to podcasts because then it's like this is the news as of this week, right?
I agree.
I agree. It takes a long time to write a textbook.
Yep. Well, Vicki, do you have any other questions you want to ask for Kinsey before we close this out now?
Well, I just wanted to ask her what she thought her vision of how crowdfunding is going to be in the future as blockchain becomes a bigger part of investing. How does Kinsey and Prime Trust and Fund America envision the world in even 5 years or 2 years from now in terms of blockchain?
So, I think when it comes to the average person, it's just like credit cards or anything else. We don't really care what's going on in the background. We just want to be able to buy the thing, right? So I think the average person isn't necessarily going to become an expert in blockchain. I think it's a useful technology that people will be using, though, without really thinking about it. And I do think you see every major financial institution is investing in this technology, and I think it's absolutely going to be the future of how we track a lot of very important data, especially in the financial space. And so that includes your investments and your money, right? But I think what's going to be interesting about how crowdfunding fits in is as people become more and more comfortable with the idea of choosing their investments rather than just having a portfolio managed by somebody else, actually deciding, hey, I love what this company is doing. I love what they're doing for the world, and I want to invest in it in the first place as they grow, but then also on the secondary markets. I think we're going to see a lot more involvement, and we're already starting to see it, of people knowing what it is they're investing in. It's not just, I've got a pension fund that's invested in something, who knows what it is. I think we're going to see a change in how people are aware of what they're invested in, what their money is out there doing, and how it's working for them, and what else it's doing in the world. So that's what I think we're going to see. And I don't know whether that's going to mean that people understand the back-end technology or not.
Well, and like you said, I don't really think people want to know the background technology, and especially with blockchain and tokens and that, it's a little bit complicated, but they want to be able to know enough so that they know how to use it to their advantage. And I think a lot more industries and a lot more companies, whatever side of the investment situation you're on, is going to need to adapt and learn through blockchain, because younger people and all people are it's going to be like the internet. Everybody was afraid of it until they got into it, and then now we can't get through the day without it. I think it's blockchain and tokens are going to be like that, where as time passes, more and more people are going to get into it just because they're more comfortable and not afraid of it.
Yeah, and the user designs are going to get much easier too.
Exactly.
So instead of having to be able to find, be able to practically write code in order to buy something or understand what it is, it'll be a lot more simple to simply log on. And I think we've got a lot of mainstream platforms that are starting to do that really well. But it'll be as easy, I think, as, an app on your phone and hit yes. Okay, I'm going to buy that. Okay, great. Now I have it.
Yeah,
and I don't
agree.
have to understand how anything works.
Yeah, right, exactly.
And it's going to become a demand of, I want to do it this way, so companies are going to have to adapt in order to not lose the potential investor.
Yep.
Yeah, and I think there's also the idea too that, maybe people are going to expect to be allowed to invest in the brands that they like the most, So if you're excited about something and you're going to be out there telling people, I love these sneakers, or what, people do that right now for free, right? They just say what they like. But you may start getting used to this idea that if you're going to love a product or a service or something, that you should be able to be a shareholder, whether it's private or public or whatever. You want to be able to own stock in it and see it go big. We all have seen companies that we've said, oh, wow, this is going to be the next big thing, right? And if that's the case, well, then why not buy the stock?
Exactly, because what's better than a built-in investor in your fan base? So, whatever it is that you enjoy doing from soup to nuts, whatever that is, being able to invest $5, $10, or $100 in that product and that company, and the feel-good feeling that you get of knowing that this is what I like, this is what I use, and not only that, I own one tiny little piece of it is, that incredibly gratifying.
And that's the promise of crowdfunding. That's why it's there to begin
exactly.
with. So, last thing, Kinsey, how do people get a hold of you? What's the best way? Website or what?
Yeah. So to try the podcast, it's at incrowd.fundamerica.com. If they're curious about Fund America, want to talk to somebody just about a demo or something, give me an email or send me an email. It's kinsey@primetrust.com, or you can do info@fundamerica.com. We have both of those brands. So it's kinsey@primetrust.com or info@fundamerica.com.
I might send you an email right after the show for that demo. That sounds great. Really good stuff. Kinsey, thank you so much for being a guest on the show today. This was excellent, great information. Appreciate your time.
Great talking
to you.
Thank
you so
guys.
much, Kinsey.
Yes. And Vicki, thanks for co-hosting the podcast today. Folks, you're listening to the Mappable USA podcast at mappableusa.com. If you go to that website, you can scroll down the homepage. You'll see all our syndication sources, and you pick the one you like best, subscribe, and you'll never miss another one of our episodes. If you want to be a guest on the show like Kinsey was today, there's a guest tab. Excuse me. You can fill that out, and we'll see what we can do about getting you on the show. And if you like what you heard, send us an email, info@mappableusa.com, or just leave a comment on whatever page you're listening to this on. So thank you very much for your support. Thanks for listening. We'll be at you next week with another Mappable USA podcast. Have a great week, everyone.